When we talk about rate cuts, it is very important to watch out for MPC meeting, which will conclude today. And the reason why is that when we talk about US markets, they have already cut down their interest rates almost by 50 basis points. And now there was speculation that India may follow the same steps. But when we talk about Economists survey, that suggests the otherwise. What they say is that around 77% of the economists from the surveyed report suggest that the rate cuts will not happen in this meeting. And they also believe that there might be a change in stance, but there might not be rate cuts which will happen in this meeting. Now, this meeting will be the 10th consecutive meeting where RBI will keep the rates unchanged if the rate cuts do not happen. And there are two reasons. So when we talk about first aspect, it is the economic growth. When we talk about India's economic growth, that is increasing, and RBI is very confident that India can increase, India can grow the GDP almost at a rate of 7.2%. When we talk about Q1 data, there we saw a little bit of slowdown in GDP growth. It was only at 6.7%, but again RBI said that it can again achieve FY25 growth at around 7.2%. So that is not going to be a problem. The second aspect is the inflation data. So when we talk about RBI, they have always said that they want inflation to remain below 4% at the sustainable level. Although for the last 2 months we have seen inflation going down below 4%, but when we talk about food inflation, that has always been an issue, and that is the reason why economists believe that RBI may not go for cutting the interest rates, because in September they are expecting food inflation to rise up once again. Apart from that, let's also not forget that RBI has recently appointed 3 external members, and their view is also going to be important to watch out for during the meeting. And rather than that, when we talk about other aspects from the meeting, we will also be watching out on RBI's commentary on the geopolitical risk and issues which are rising, and at the same time we will also watch out for any kind of trajectory change. Now that we know that GDP growth for quarter 1 was at 6.7%, a little below RBI's expectation. So any kind of changes in the GDP expectation is going to be a key thing to watch out for. But when we talk about overall conclusion, it seems that they may change the stance, but they may not change interest rate, is what economists are penciling in right now.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.